comes out bad. Good morning, everybody. This is Dee Dee with Power 3 Trading. Thanks for joining. I'm not here just to teach you the strat, but to teach you how to execute from the strat techniques. If you have more information regarding the strat, please reach out to my guy, Rob Smith at Smiths in the Black channel, Rob in the Black on Twitter, or at sepiagroup.com. So yesterday we talked about a couple gappers. Walmart reported, or they didn't report, but they gave an update on their forecast projections, downgraded, right? So reduced their forecast for the quarter and for the year. And of course, it sent the retailers packing. So we talked about it yesterday, and I'll just show you the trade. I did not trade it, but I wanted to show you average daily range and how beautifully that traded. But because I was in other positions, I saw this move, but I didn't care for it because, again, small range, right? So when we talked about, if you watched the video from yesterday, we talked about the average daily range and how I like to trade reversals off of those average daily ranges. And Walmart yesterday, so the average day, the high, shall I say the average daily range here was about 122, 120. So, I mean, really, guys, we're talking less than a couple dollars. So you could have made a couple dollars depending on your position size in Walmart off of this reversal, but we'll talk about it. What we said was Walmart was gapping down, and I drew a couple broadening formations off of the daily. Excuse me. We drew a couple broadening formations off of this daily range because Walmart was trading inside these ranges here at the gapper. And you can see here was the gap down here. So we're in this range. And so I use this as a potential target, right? And then the low here as potential targets. But you can see it never traded down to those levels. And here's why I really like the average daily range. And I talked about this in my Benzinga video. With gappers, excuse me, guys, with gappers, you have an opportunity to, without having to draw broadening formations, see where price action may kind of stall out at the low or the high of those daily ranges. Because what we see with Walmart is it gapped down. The daily range, the ADR, formed. And you can see it's still, after that gapper, it's still traded within its average daily range. So this is a great script to use, because we already knew that it, given the size of this gapper, it had gapped more than its average daily range, which we figured was about $3. So we knew it had gapped all the way down. Given this range here, it was already below its average daily range. But then you get the new range formatted on ADR after that gapper. And so now it traded within its ADR for the gapper. And so I just really wanted to show you this and how you could have traded this off of this reversal. So first 90 minutes, right? So that's these 18-minute candles here. And you see how it kind of stalled here at ADR with CC crossing back over, guys. We're not looking to short here, right? So can't really see that, but it was a 2 down, 2 down, 2 down. On my gappers, I like to see a 2, 2, 2 on all my trades. And on an inside bar, I like to see the reversal, right? Because I like to trade reversals. So instead of trading continuation, 2 down, 1 continuation with CCI crossing up, we're not going to take this trade down. We're looking to trade the reversal. And so here you go, right here at the 90-minute flip, CCI crosses back over. The 90-minute is still well below -100 here. But again, you're at the low of your ADR. You had this inside bar 1, 2, 1, 2, 2 rev strat, 2 down, 2 up rev strat. And then we're going to use this inside bar as our stop loss, right? Because it's right at that low ADR. So if price had traded up and come back down, right, below this range, we would have taken a loss on that. But it actually traded up, and you can see that cross right here, confirmation to the upside. So I did not trade that, but I wanted to show you really how ADR played a nice role in helping us define our lows and then trade it back up to the high of that ADR. And you can see here in the next 90-minute flip, it traded up and came right back down. It hit the high here, 1230. And here you go, your first 2-2 at that 90-minute flip, and then it reversed again. All right, so let's look at Target, how it traded. So a little differently than Walmart in that it traded to the top of its average daily range, but couldn't pull it off. Right, so you had your first 18-minute flip here, traded to the top of that range, but again, guys, we're still in the red zone. We're still in the red zone, so it crossed over here, potential 2 up. So you had your 2 down, inside bar, 2 up. CCI was still in the red zone. Better trade to the short side until you get this crossover. Better trade to the short side until CCI crosses over. And then you can see on the 90-minute flip right here. Better trade to the short side. Here was your 90 flip at 11. You had your 2 up, and 1, 2 up, 2 down. And then we take the low of this guy here and we trade that 2 down. But again, CCI started to cross up. So small range, very similar to Walmart. And we had drawn our broad information on the daily here as well. And you can see, again, it was daily in the average daily range, the low of the ADR and this daily broad information we had drawn were pretty close to each other, but never trade down to that level, never traded down. Next 90-minute flip, price had traded 2 up, 2 down. So it was TTO here, TTO. So if you had tried to take that 2 up, but again, guys, you're inside 90. I don't particularly like to trade inside 180. Or shall I say 3-hour patterns. I will take the first 90-minute flip, right? I will take that first 90-minute flip, but now you're in a 3-hour flip. So if you were to look at this, guys, you have to be careful. I personally, 2-hour and 3 hours, I don't want to trade inside those ranges. I'd rather wait. But there was a little movement there. Sometimes it works, sometimes it does not. So just be careful with that. All right, so that was that. Let's take a look at Netflix. I mentioned I was holding Netflix long. So here is how that worked for me. The opening on this trade did not work well at all. So I was long on this guy. Then it finally traded, reversed off the top of this daily range. So this I actually did not redraw. This was from, because I was in from the prior day. I did not redraw this. This was from the prior day. All right, so it hit this top of this range, reversed. I actually added here, did not actually add it here. So it wasn't a really good, I missed my opportunity here. Trading Coinbase, because here's what I want you to see on these moves. We always talk about what time frame you're going to use for your entry, right? So I use the 18-minute. So again, trading reversals, 2-2 reversals, or 1-2-2, 3-2-2, but they're all reversal strategies. All right. So, but you can trigger your move using the shorter time frame. So when I flipped back over and saw this, so I'm still in it from the prior night waiting for my reversal. And here you have a signal on the shorter time frame. So here's your, so let's try to, okay, so 10:06 right here, guys. So here was your move. You had this outside bar in the 6-minute. This is your 18-minute flip. Remember, I'm looking to short Netflix. I'm going to put already, I want to trade this to the downside. This goes 2 down, 2 up. I'm not taking this trade. Remember, I'm going to put right now, and I'm actually not even monitoring it at this point. So I'm going to put right now. Here is the next flip. Here is what you see in that next flip. You have a 3-2-2. This would be your target on a 6-minute time frame. Even though your actionable signal is on the 18-minute, this triggered it. There is this 3-2 up, 2 down triggered this 2 up, 2 down on the 18-minute time frame. So again, we're going to start with what's our actionable signals. I trade 2-2 reversals. Then I go to my 6-minute time frame and I look for my entries. When this turned the 18-minute red right here, because remember, this was our flip. This turned the 18-minute red. Here is my thought. This was an outside bar. This went 3-2-2. Take this out on a 6-minute time frame. Guys, this is your also. So as soon as this takes this out, this is now your 18-minute flip. So if this works well, you will have gotten into that trade earlier. All right, so 3-2-2 triggers this 2-2 reversal. And that becomes a really beautiful trade. I actually swung back over and I got in after it triggered. So added to it. So we made a little money, but then it didn't trade that well for the rest of the day. So I was done with Netflix. Again, you have to decide for yourself what time frames you want to take your signals, but I'm a 2-2 girl, right, on the 18-minute. And then this started trending up. Again, one of my little nuances, I had considered getting back in it. I had set this, you can see my little timer alert. I set an alert on this trend line. It did cross back over on this 90-minute flip here. It crossed back over here. Could have taken that down, but I didn't trade it. I didn't like the way the market was trading toward the end of the day. All right, so let's take a look at coin. Coin was another gapper, and I'm going to tell you where we got in here. This is, I think I mentioned, and maybe it was off recording yesterday to one of my buddies, Jim, is I'm looking for, and if I can get my signal, because again, guys, I'm on the 18-minute looking for my my entries. But if I can get a signal on the 6-minute time frame, and I'll show you what I did with Tesla as well. If I can get my signal on a shorter time frame, in that, because it's going to be that last 6 minutes of that candle. That's going to be, because I use a 6-minute time frame. It's going to be also that 15-minute flip, right? So because this is a 6-minute chart, not a 5-minute chart. So this flips at 9:42, right? So the last 3 minutes of that time frame is going to be your 15-minute flip. All right. So so when coin was beautiful, we had a 2 down, 2 up, guys. I like 2-2 reversals. This was the entry right here. And remember, well, I think we did this offline, but we drew our broadening formation off coin this way. We knew we needed to, we were going to short coin as long as it traded below yesterday's low. So that was this trend line. And then we're going to use our average daily range to help guide us into whether or not market was going to reverse or continue. And so, but we drew these broadening formations just because I can't help myself. And we said, if it was going to continue, it had to take these other 90-minute candles. So we said, trade below yesterday's low. Then we drew a horizontal line here. We say, all right, well, if it's going to go lower, it's got to take that. And now we got this 3-2-2 setup, right? And this would be our next lowest target. And of course, you can see average daily range. It sits almost on top of that broad information, right? So this is our first one. This is our second one. So we knew we were going short here, but this is what I prefer on a gapper, guys. Instead of price going 2 down, 2 down, 2 down, 2 down, and trading down on the 6-minute time frame into our ADR, I want price to go 2 up. I trade 2-2 reversals, whether it's on the shorter time frame or the longer term time frame, or 1-2 reversals is my are my bread and butter. And so 2 down, 2 up, 2 down. CCI still confirms significant move to the downside. It hits ADR here, crosses over, comes back up. I'm out of this trade. I'm out of this trade. Unfortunately, I missed the move to the downside here. Did not did not capture that. Did not capture that. All right. So, but what did you see though? ADR stood up. It did not. It crossed over it a little bit here again. Here's our trend line. Looking at your 90, guys. 90 is in force. It 2 up. I'm sorry, inside. This was a continuation pattern, but CCI was trending up. I did not take that move. And then I was pretty much done for the day. I did not take that move. It then traded back up inside, crossed over. That was tricky in that 90 minutes. This 90 minutes, it goes 2 up, 2 down, but it's inside this 90 minute. I'm going to just draw a line here so you can see that. All right, so this was the low of this 90-minute candle right here. Now, here's your 12:30 flip. It's got to take that 90-minute low because these are continuation patterns, right? You didn't have an inside 90, so your continuation on these longer time frames, they can be tricky, right? Get stuck in this range. And then finally, you had the 4-hour, 2-hour flip, or the 4-hour flip. Let me just show you that here. So this was your 2 hours right here from 11:30 to 1:30. Here, your 4-hour flip right here at 1:30, right? And then price traded below that 2-hour range. Cross back below that 2-hour range, guys, and it went down for the rest of the day. Did not catch that, but that was beautiful. That was beautiful. Okay. So that's why I said, if necessary, you'll want to, find the time frames that make sense to you. So, our goal here, and here's another view, which is even more beautiful, guys. Remember, it doesn't matter which time frame for me. I trade reversals. Here was a 2 down, 2 down, 2 down. I just saw this. I just flipped over to the 60. 2 down, 2 down, 2 down on the 60. Exhaustion. So at that 11:30 flip, you see it closed inside that prior range, right? Then it went 2 up. Why are we not trading this long? Oh my gosh, you got a big gapper down. First of all, big gapper, trade it down, 2 down, 2 down, 2 up. So we're not going to take this guy. We're not going to take this guy. It's below our average daily range. There's nothing to suggest that this thing is going to crawl back to the highs. So we're going to trade this to the short side. But look at that, how beautiful that was. I'd have taken the low of that 60 had I been paying attention. This is a 2 up, 2 down right here at the 4-hour flip. And you taken the low of that 60, guys, and this 2 up bar and traded that down. So 2-2 reversals. So this was a reversal on the 60, but guys, it was a continuation on the 90. Still right on the day. So it's all in which time frame you are looking to trade. So you have to think about that. Again, I like inside bar reversals, right? Versus the continuations, just because, you know, they trade a little bit better. So I like 1-2-2 reversals. I like 2-2-2 reversals and 3-2-2 reversals, all 2-2s, right? Those are my trades. All right, and then there's this Tesla crap, and then I'll tell you what I did, because I missed this move. It was a bit frustrating. So one of my guys said, "Hey, Didi, what about Tesla?" I had taken them off my list, made a couple dollars. Again, if I can get a move on that 18-minute flip, given, you know, I have my signals. This, and I tried this with the Tesla off of the inside bar. And this is why I said the inside reversals trade a little bit better. This didn't do so well. I did the inside bar of the 60, right? So I took the low of this inside bar on Tesla. So it went 2 down, inside, 2 down. It traded down. We actually drew these lines here again. So this was the low of this 90-minute candle. Well, let's see, where did I get that from? Let me go back to the daily. Did I draw something? Can't remember where I got that guy from. Yeah, I'm not sure where this line came from. Unless I was on a different time frame. Let me look at the 60. Yeah, I don't know. It doesn't fit. Hang on one second, guys, because I was on the 45 as well. Let me see if I did something here. Yeah, it doesn't fit. I'm not sure where this line came from. I can't remember now. But anyway, we drew this broadening formation. This was the low of that 90-minute candle. This, I just don't remember. I may have even added it later. I don't even remember. And so we were looking for a price to trade lower. It did. It hit this level here. It did take out this low because we said, because price was, let's go back. Aha, mystery solved. Mystery solved. All right, so 2 hours. Sorry, guys. I went back and added it, and I couldn't remember why. This was a 2-hour flip because I was looking at these ranges, because what we had said was this was a huge range that Tesla was trying to take. And so I went back and drew this horizontal line on this 2-hour range in addition to the 90 range. So sorry about that. I did that later after our recording. It's like, where did I get that line from? And so anyway, so that was that 2-hour range, and you see it held. It held. All right, so I drew this. I said, okay, well, I'm going to take the inside 60. I'm sorry, inside 6 minute. It traded down. Let's see, it traded down to that range that we drew, the low of this 90-minute, and then came back up. So small profit on that. And then I didn't like this. I didn't like this. Now here again, 2 down, 2 down, 2 down, 2 down. Continuation, I did not trade this guy. I did not trade this guy. But here is, you can see this TTO here. This is this 18-minute time frame. And then you had your flip right here at 10:06. See how CCI was trading up? I didn't like that. So you had a little move off of 2 down. So this was a 222 right here. I didn't care for that. Because again, 222 going into some exhaustion, traded back to that level. Then it got close to our ADR. But then I saw this guy. I saw this guy here because this is these are the better trades in my opinion. So you had this 2 down, 2 down, 2 down, 2 down, 2 up. It reversed to 18, but looking at your 90 right here, not going to take that guide. Direction is definitely to the downside. So I'm not trying to take this trade, but I saw this 2 up and I said, ooh, I'm going to take this trade. And so now here's my signal here. So this is your 18-minute flip right at 11:18 inside bar. I get in, I don't get the best entry, but I see it late. I get in somewhere in this range. So they had already crossed that inside bar. So I get in somewhere in this range. It trades down to the average daily range and comes back up. Well, the last time I didn't take that after average daily range, it went all the way back up. So it's like, you know, let's just go ahead and exit here. So tiny profit. And then it takes this big move. I try it right off the next 18 minutes right here, guys. It takes this big move. So it went 2 down, 2 up, came back down, and I missed the move. I tried to do a limit order. It didn't trigger. And those are the trades you like. And you know, it's a great trade when it doesn't trigger your limit order. It didn't come back in. It just went, so I missed it. All right, so that's that. All right, let's talk about today, guys. It's Wacky Wednesday. Don't like the market. First of all, let's look at economic data. So here we go. At 8:30, right? So it's early. So we still got plenty of time in the day. We'll see what the market does, but durable good orders. I use Daily FX because I love their economic calendar. But of course, if you trade FX, you probably already are familiar with this. But I love their economic calendar, so you can check that out. They give you, if you're not clear on what that is, they kind of give you description, some historical information, related news. So it's pretty nice. I just, you know, have an idea. So I'm just looking for high, medium, and lows, right? When it comes to economic data. Now, of course, you can scroll back and look at what happened in the early morning for the other countries. All right. So here we go. We got durable goods coming out. We'll see whether or not inventories are there. The buying power. So orders placed, right, for manufacturers to delivery, we'll see. And I don't really pay much attention to the low. Pending home sales, we'll take a look at that. And the reason this is important right now, guys, is because inflation, right? And it gives you a little information on that. And then scroll down, because what I'm really interested in is, boy, this red hot Fed rate decision, guys. Today, 2 o'clock. Here's what we're waiting on. So what's happening right now, okay? The market is trading higher. So we're going to be careful at this open. Look at our screener. We got a lot of gappers up this morning. I'm like, why is the market gapping up? Potential. Let's trade the market up. You know, my few low contracts does nothing to influence this market, right? So we have to go with the flow. So we're going to be looking at some of these gappers, right? PayPal, Google, Microsoft. So Google and Microsoft both reported yesterday, guys, and they missed. All right, so let's trade it up. Snow, Roku is just a dog, data dog. Texas Instruments blew out their numbers. Yay, TI. Have a good friend that was an attorney for TI, so good for them. And yeah, so then we got Facebook, NVIDIA trading all above my 2% criteria. So that's why they showed up on the list. Okay. So I kind of looked at a few. Let's just take off the ones that we looked at yesterday. All right. Let's start with the Googs. Here's what what it looks like. All right, so it missed on top and bottom line. So I'm like, wow, seriously? Okay, well, it's trading up. So we're going to be careful though, guys. Again, we're at the end of the month. We're at the end of the month. All right, look at this outside month here on Googs. All right, it's red on the week. Looking at where it's opening in pre-market, it may turn green, but it's Fed day. It's Fed day. Remember now, they're going to make the announcement. The market is a betting on 75 basis points, but then it's the meeting afterwards. So I would caution you not to do any trading after, say, 1:30 if you're in the market till 3 o'clock, because the announcement will come at 2, meeting at 2:30, and you're going to see a lot of volatility. It'll be hard to gauge which direction the market is going to go until after the 3 o'clock. And let's just maybe try to trade to close. All right, so at the open, here's what I'm looking at, and quite frankly, I don't like it. Today is a new 3-day flip, so we'll have to see how far price action is going to go. Microsoft is going to go, looks like it wants to trade 2 up. Big outside bar on that 3-day, though. Etsy gapping up. No, I think it's no longer on the list. It was this morning. Yeah, I don't think it's on the list. It looks like it's trading back inside that range. I'm going to take that off. Snow, again, this has been a dog. I mean, look at these moves, guys, red. So I'm not going to let these gappers fool me. Data dog, again, monthly lows. I meant, did they report? They reported yesterday as well, and they missed on top and bottom. Oh no, that's Google. Sorry, I thought that was Datadog. Oh, here's Datadog. All right, so no, they don't report yet. But again, look at Datadog. It's everything is hitting probably some exhaustion. You're at monthly lows. TI, I normally don't trade just because it's not much of a mover, but it's gapping today, so we'll take a look at it. PayPal, I do trade. All right, so we'll look at PayPal and TI. From a gapper's perspective, let's look at Texas Instruments. But I'm going to probably focus on my short list, guys, right, which consists of NVIDIA, Microsoft. You know what? Let's do that because Microsoft is on my list and it's gapped. I think it's gapping a little bit. Yeah, let's not look at TI. I don't really trade it. So let's look at Microsoft because my short list is NVIDIA, Roku, Netflix, Microsoft, Meta. Let me look at Meta. Yeah, because it was a dog yesterday, but it's gapping up a little bit. Let's remove these. We'll look at Microsoft. It's gapping up today. And let's look at Google. Those are the two that reported yesterday, right? All right, let's do that because they're on my list. Texas Instruments is not on my list. All right, so let's see. Well, we know we have to trade outside yesterday's range, and we're going to use our CCI. So we'll do this. This was the high, right? So we know it has to trade above this guy, stay outside of this range. Has to stay outside of that range. And all right, so we know price action has to stay outside of yesterday's high. You had this 2 down bar. So for sure, we wouldn't even be looking at this because you had an outside bar the prior day, then it went 2 down, 2 down, 2 down. So 2 down, right? It went straight down yesterday. So we know we want price to stay outside of this range. Now, and we're going to use a average daily range, right, guys? We're going to use our ADR. So we'll have to keep an eye on this after the market opens. Remember, gapper, which means 2 up on the 18, continuation. We have to wait for, right? So our 6 minutes, 18-minute flip, we will know where our ADR is. And we'll be looking to see if price is trading up against that high ADR or low ADR. We'll be looking at it. So once it forms, and then we'll look for any potential reversals off of that. But keep in mind, this will be our target if it trades up and comes back down. And obviously, if it comes back through that range, I would like to get in before it breaks that range. So we'll be looking for entries off of a 2 up, 2 down on an 18-minute. All right. So I'll plug that. So we're going to go long above yesterday's high. All right. So, and this was a 2 down, right? So this will be a reversal off the daily, 107.20. Okay. So we're going to go long above yesterday's high with CCI crossing above plus 100 on 18-minute, right? We're going to wait if price hits a high ADR and look for potential reversal. All right. That doesn't mean it's going to reverse. Okay. With CCI crossing below plus 100 on the 18-minute. You got it? All right, so I'm just gonna copy that because it's gonna be the same for Microsoft. Keep it, make it easy, copy. All right, so that's how we're gonna look at this. So patience, we'll wait for, we'll go long if price trades above yesterday's high. So we got this gapper up. And we're going to look to short it. This may not cross over right away on the 18-minute, but it may cross over on the 6-minute. So if it crosses over on the 6-minute and I get a 2-2 reversal, so 2 up, 2 down on that 6-minute, it turns that 18-minute red, creates a shooter or something on that 18-minute, I may get in if CCI crosses on the 6-minute. So let me put that. Let me put this here, reverse on the, because here's what may happen, guys, 6 or 18. Good set, because here's what may happen. On gappers, they don't always cross over on the 18-minute right away, but there are moments where you can get some good momentum and get into the position early. But I will tell you, it's a higher risk trade on those gappers trying to trade those reversals, because they may trade down to a level, and this is where broadening formations come in, and continue, right? So on that 18-minute flip, you may see CCI continue to the upside. So you have to be careful, get in, get out, if there's no continuation to the downside. But if there's a shooter, I like that better on the 18. All right, and so let's look at Microsoft. You know, again, I believe Microsoft said that FX had an impact on them as well, or was that Google, or both? So PC market has slowed, you think? All right, so we're going to draw that there. Okay, so we know it's got to cross above that range. So we need price to trade I like that. Okay. We need price to trade outside of this range. Again, on Microsoft, you have this big outside bar, guys, and you have a 2 down, inside, outside. So we want big move here. So very similar to the Googs. We're going to go long above 259.88. I'll just call it 260. And everything else remains. And so if price continues, so again, looking at our ADR, if price trades above the high ADR or below the low ADR, we'll look for a continuation above the high of the high ADR and a reversal below the low of the low ADR. All right, so keep that in mind as we go through this trading day, but do not, and I repeat, do not get stuck inside an 18-minute range. So let's say price gaps up in that 18-minute and then it just trades inside that opening 18 until the Fed meeting. All right, just avoid that. All right, we don't want an outside bar, or probably won't be an outside bar, but we don't want a big 18-minute candle and it just stays inside that range. We need price to break. Okay, we need price to break outside of that range. Maybe it's a reversal, maybe it's not. But again, if you're trading 222s like I am, then you're certainly not looking to trade inside that 18-minute range because you don't have your signal. And then you have to wait till your 90-minute flip. Okay, because you're inside that range. So maybe some 2-2s, they're inside that opening range. Wait till your 90-minute flip. All right, that's what I got for today, guys. We're going to end with our scripture, Proverbs 21 and 5. The plans of the diligent lead surely to advantage, but everyone who is hasty comes surely to poverty. We do not want to be broke trying to trade this market. Okay, so use due diligence, take your time, no hasty speculation. All right, thanks everybody for joining. I appreciate it. Take good care.